Hello, good morning and welcome. You've tuned into ET Now, and this is Buy Now, Sell Now with me, Varun Hiremat, and along with me, Karunya Rao. Let's take a look at the markets today. We're 1% down on the benchmark. Nifty's at 14,290, one of the largest falls we've seen in the last couple of weeks. Contrary to what people think, the midcaps today are down nearly 3%, and the frontline stocks are tending to hold their fort a little better. Within the indexes, your banking index is a bit on the chin today, and the financial services index as well, down 0.6%. Of course, we have one select financial, HDFC Bank, which is standing out, up around 2%. But it's a broad-based decline today. The breadth is really in favor of a bearish trend. 44 of the Nifty stocks declining, just 6 advancing. And also another interesting thing I'm seeing is that a lot of commodity stocks are losing today. So people seem to think the trade is gravitating towards commodities. Tata Steel, Hindalco, ONGC and Coal India are your top losers on the Nifty today. So definitely, some profit booking. Let's catch up though with our experts and get some more insights from them as to what exactly is playing out today.
Yes, but before we do that, let's pull up the Buy Now, Sell Now stock cloud real quick to understand all the key names to keep on your watch list today. Starting out with HDFC Bank. The lender delivered its Q3 numbers this weekend, and it's actually been able to buck the trend of the overall market today. It's up a good 1.8% in trade. Next up, you also have to watch out for a PVR on the back of its results and some brokerage verdicts coming in for the company. The stock definitely continues to trade weak. Happiest Minds, in the meantime, another name that's bucking the trend at large. BNP Paribas has bought about 9.3 lakh shares in the company. Wipro, in the meantime, is in the limelight as well. It's been chosen as a strategic technology services partner by Fiat Chrysler Automobile. You also have an L&T, which is in focus on the back of its Q3 numbers. And as far as numbers today are concerned, we're watching out for India Bulls Real Estate and Rallis India, two stocks to keep on your radar. You also have another name from the broader markets, Metropolis Healthcare. It's acquired high-tech diagnostic center in an all-cash deal. And finally, Tata Motors. The stock seems to have come to a screeching halt. JPM, which is JP Morgan, has maintained an underweight stance on the company. The target that they've given is 260 rupees a piece. So there you have it, the stocks to watch out for in this hour.
Karanya, the BNSN stock cloud should be up on your screens, but I believe our experts are ready. Kunal Bothra and Raghvendra Kedia are both with us. Good morning, gents, and thanks for taking out the time to chat with us on BNSN. Kunal, just last week, I remember you were saying 14,250 is a critical support for the Nifty, and today we're pretty much there. We're just around 20 points away. The metal index is having a tough day, down 4%. Media index, one of the things we've been quite positive on, is down over 3%. Pharma's down nearly 3% today at the index level. So, do you think we're going to defend 14,250, or are the charts indicating that we might slip below there also? And in light of that, what are your calls for our viewers today?
So good morning, Varun. I still believe that 14,250 is important and a critical support for the index, at least from a short-term charts. You look at the intraday levels for the index as well. I think we just hit that 14,255 or 260 mark on the spot levels of Nifty, and from there we've bounced off 50-55 points. So even if it's a marginal kind of a bounce, but it tends to give an indication that 14,250 is a very important and a key support. So the market generally tends to bounce very close to those kind of support levels. So we've seen that resilience panning out. So I'm hoping that 14,250 level could be defended by the end of the day. I still believe that on the slightly shorter termish kind of a time scale, we are still consolidating. So I think 14,500 is acting as a pivot range for the index. So plus or minus 250 odd points is where the range could be for the Nifty for at least the next couple of days. So I think on that backdrop, I still believe that a lot of stocks could offer good opportunities at current levels, and especially if these stocks go through their periodic round of corrections as well. So the first one which I'm indicating is a Ban Bharti Airtel. Now it's interesting because the stock I think on Friday previous week was very close towards breaking its all-time high levels of 610 approximately. It scaled down a bit lower, I think 1.5 or 2%, but I still believe at 585, 590 levels for Bharti Airtel, it's an attractive buy zone. The stock is still confirming strong indicator breakouts on the on charts as well for the daily as well as for the weekly time frame. So Bharti Airtel is a buy on, from my side as a first call. Targets to be kept at 630. Stop loss could be taken to approximately at 570. And the second would be a buy on Petronet. Now, it's interesting because Petronet has been a stock which in the last 2 days or 3 days has corrected by almost 20 rupees. So 20-25 rupees has been the correction for Petronet, which is approximately 8 to 10% of the stock price. But now I think it's come back into oversold territories of indicators. Chart patterns have started to show signs of divergences. That's bullish divergence. So all of those aspects indicates that I think Petronet could be a stock where traders could look at a contrarian approach from current levels. So I would suggest a buy on Petronet as well for a target of approximately 260 plus, and stop loss could be kept at 240.
Okay, thanks Kunal for your trading ideas. Raghavendra is yet to join us on the show. In the meantime, let's understand what market veteran Saurabh Mukherjee says on the automobile ecosystem. He anticipates the next round of capex announcements in the auto space to come out soon. Listen in to his rationale for betting on this space.
It does look like the auto ecosystem is humming. Both OEMs are humming. The auto ancillaries are reporting full scale capacity utilization. My reckoning is by summer this year, both at the OEM level and at the auto ancillary level, we will get the next layer of capex announcements as the auto companies will, I think, spend another 6 months with full order books, and then they will try to think about the next layer of capex announcements. I think the announcements will likely come through this summer if the auto cycle holds up. Certainly in the reports that we are getting from lenders, loan dispersals both for cars and for two-wheelers are very healthy. So we're doing more work on the auto ecosystem to see what else can we buy there.
Okay, back with our expert Raghavendra Kedia is with us. Good morning. Great to have you on the show. What are your calls for our viewers today?
Let me begin with my first recommendation, which is IG Petrochemical. The stock is currently trading at levels of 390. We believe there is a 45% upside, which would give us a target of 560 from current levels. IG Petrochemical is the largest manufacturer of phthalic anhydride, that is PAN, in India and also globally. IG Petro for PAN is among the top 5 players. For most of the products IG Petro manufactures, they have a market share of 50% plus in India. So that is very comforting. Now, going to the products, phthalic anhydride usage across paints, resins, plastics.
Okay. We'll get back to our guests on the other side of the break to address viewer queries. Right now, we're taking a short commercial. Stay tuned. Welcome back. You're still watching Buy Now, Sell Now, and it's time to kick off our viewer queries on the show. Both Kunal and Raghavendra are with us to help our viewers out. First up is an email from Jash Somaya. He's based in Indore. He says that auto has been on an upswing post the recent data. He is closely looking at CEAT and JK Tires because that's the stock that he is finding attractive at the current juncture and would like to invest in. He wants our experts' views. Kunal, talk to us about both of these charts, CEAT and JK Tires, because if you look at the last 1 month move, the chart is almost like a mirror image of one another, and both of these stocks have added about 19-20 odd percent to the value. Tell us which one seems poised for a better growth from here on, and which stock would you recommend to Mr. Somaya?
Yes, Karunya, I think from the auto ancillary space, I think the tire stocks have just last few months have gained a lot of traction. You saw Apollo Tyres doing exceptionally well. You had MRF as well, which did phenomenally well rather. And now you have stocks like CEAT as well as JK Tires. They are also trying to pick up pace. But then there is a lot of traction which these stocks have to scale past, to try and outperform the bigger peers. So the initial question is that can you really be parked with the leaders or the second rank performers expecting that the second run performers would probably try and play a catch up in the sector that's from the tire space. Now, if you still believe that you want to go with the high beta pockets like JK Tires and CEAT, then I believe that current levels are decent enough levels where you can look to invest. I believe that both these stocks, JK Tires as well as CEAT, have come back to their key short-term support levels. So ideally, a retracement of a 5% to 10% from their previous swing highs is a good enough retracement support for many of these stocks. So I think in that kind of a backdrop, both these stocks are looking attractive, and I believe if you're looking to invest, then from a longer term horizon, these could be good levels. But again, the question is that whether the large cap ones would outperform. My belief is that stocks like MRF, Balkrishna Industries, I think these stocks would stand a better chance to outperform from the sector overall. But the only concern with stocks like JK Tires, CEAT is that they are traditionally very high beta pockets and high beta stocks within the sector. So if you're okay with high beta, then I believe going ahead with JK Tires as well as CEAT would be a good proposition.
Okay, thanks for that, Kunal. So flagging off some caution there. These are tier 2 tire companies. Let's remember that. But Mr. Kedia, on the fundamentals, some of these companies which are very highly leveraged, when the economy makes a comeback and demand comes back and utilization shoots up, these companies tend to outperform sometimes even companies that don't have any debt. So in that sense, JK is a decent bet, right? What's your take?
Absolutely agree. Where we are now currently sitting at life high levels of the market, and even in the last 6 months, the auto space and the auto ancillary space have done significantly gone up too fast. So there is a lot of caution we would apply to before we would pick any of these names. We prefer JK Tires, considering there is some more value left and a headroom for upside. Considering its P multiple is still cheaper to its peers. JK Tire currently is trading at a multiple of around 30 to 14 versus peers in the range of 15 to 20. So any value buy would give some upside in JK Tires. CEAT also we like, but between either or JK Tires and CEAT, our preference will be on JK Tires to buy at current levels.
Okay, great. So he's quite positive on both those stocks. Let's move on then to our next query. Our next query is from the line of Rahul Jain from Mumbai. He wants to invest in some cheap auto ancillary companies. He's mentioned Rico Auto is a stock he's evaluating. And it seems that they have done a lot of investments in the past, but it's not translated into revenue just yet. So Kunal, on the chart, technically, what would your advice be to Rahul?
Chart, Rico Auto from 18 levels or 16 levels from March 2020, the stock has come back to 36. The all-time high for Rico Auto is approximately at 110, if I'm not wrong. I think it was in 2017 or 2018 when the stock was at 10. So I think it's a stock which has gone through severe corrections from 110 to being almost eroding value of almost 85 to 90%, and then now making a comeback. So there is that element of risk which is attached into these mid-cap names. And the bigger question which I want to highlight for the viewers, I think even for the previous question of tire stocks and at current levels, is that many of these mid-cap names, they tend to thrive in a market which is completely gung-ho, which is going up significantly higher. That's where the mid-caps tend to outperform. But the moment the markets enter into a consolidation or into a downward drift, it is these high pockets of mid-cap names which will also see a sharper phase of correction. So on charts, many of these stocks, like for example Rico Auto, I think the previous high for Rico Auto was approximately at 42 or 43 level. That was previous week, and the stock is now at 36 level. So it's already dropped down by almost 15% or 16%, from the previous swing high. So there is always that possibility that the correction to these stocks could be a bit more higher. I would suggest that a better entry point for Rico Auto would be approximately at 32 levels. The 200-day moving average is also at 30-32 zone. So I think that could be a good enough entry point for you to enter if you're specifically looking to buy Rico Auto.
Okay, got it. Raghavendra, what are some auto stocks that you find attractive at the current levels where the triggers are in place and prospects are bright?
From the large cap space, we continue to like Tata Motors. It's a great play and a stock which we would like to have in a long-term core portfolio, considering they are present across multiple segments of passenger vehicles, LCVs, and heavy commercial vehicles. Specifically in the truck space, their market share is 50% plus. So that's a great bet to have. Plus, Tata Motors also have its, through Jaguar, it has its presence across the China sales and Europe sales. So it's a global stock in a way where that proves out to be a good hedge if there is a slowdown in any particular geography. Now, the management has come on board and said that the debt levels would significantly reduce in the next 2 to 3 years. Any joint venture partner on the electric vehicle side could be a big positive boost to the stock. Fundamentally, they are getting their house in order in terms of the debt, in terms of the sales numbers picking up. So Tata Motors is our top pick from the large cap auto space. Moving to Ricoh Auto, we do like the stock. The management commentary was very upbeat. The capex done in the last few years would come out with fruits in the next few quarters. So any dip in Ricoh Auto to levels of 35, 33 would be a great entry point. This Ricoh Auto could be a slow and steady mover, and levels of 50 could also be achieved. So that is another pick from the auto space on the small cap size.
All right. Okay. Thanks for that. Our next query is on Tata Motors. Incidentally, Geeta Rai writes to us from Jaipur. She's bought 500 shares of Tata Motors at 199 rupees level. She wants to know if she should continue holding or should book her profits. Perhaps she's feeling a bit jittery after the stock has started, showing some weakness, perhaps a correction of sorts in the last 1-2 odd sessions. But Kunal, you've been bullish on Tata Motors for quite some time. Talk to us about, how do you see the forward moves from these levels? 245 perhaps is where it's perched at, seen a solid 50% uptick in the last 1.5 months. Would you advise the viewer to stay put, or should she book profits?
No, I think it's good enough to, zone to try and book out, some profits over here for Tata Motors. The stock has done exceptionally well. Look at the volume comparison for Tata Motors. So when the stock actually started off rallying from those, sub 70 levels, from March 2020, the volume concentration for Tata Motors was very, very average for the stock. But you look at the volume composition or the concentration just last month, I think December and January, these are the 2 months where you've seen the average volumes for Tata Motors move up significantly higher. So which means that there has been a late participation into the stock price. And whenever we've seen late participation into stock prices, which have rallied up 100%, 200% odd, there is always a case that these stocks may go through their routine correction, may take out the weaker hands, and then try to restart and kickstart an uptrend for itself. So on that backdrop, I believe, yes, it's a good zone where you can take out partial profits on Tata Motors and then wait for some correction. So if the stock, for example, I think if I'm not wrong, it's at 250 approximately. So if the stock say comes back to 220, 225 kind of a zone, you can look to repurchase what you've sold at higher levels. So I think that should be a strategy. But from a longer term view, my call is still extremely bullish on Tata Motors. I believe that this should be a stock which could go into a multi-year uptrend from current levels. So if you can adjust some bit of trading from your holdings on Tata Motors, book out partial profits over here and then look to buy back on dips, I think that could be a much better strategy for you.
Okay, thanks Kunal. Raghavendra, how about you? Would you buy Tata Motors at current levels?
Well, we would buy Tata Motors at current levels and continue to keep it on our radar. Any dip to levels of 230 would be great entry points. Considering the caller has bought the stock at 199 odd levels and the stock currently is at 245, the caller can actually book some profits, but only to re-enter back at any dip. The stock has gone significantly up in the last 3 months, so has the market. So it is vulnerable to any market correction as well. But so partial profits can be booked, but only to buy the stock back at levels of around 230.
Okay, great. So both are experts giving Tata Motors a thumbs up. Fundamentally, it might offer you a slightly better entry point. Let's move on. Our next query is from Apurva Mehta of Delhi. And Arvind Limited is a stock. he or she is looking at, and commodity prices are up. Also, denim seems to be showing some traction. So, Kunal, on the chart for Arvind Limited, what insights can you offer?
I think it's an interesting chart. In fact, I had a detailed look at many of these, textile stocks over the weekend, and I was surprised to see, Arvind, doing exceptionally well. So even though the stock on the daily charts is down some 2% today, but you look at the, pickup of volumes, and just for an example for Arvind as well, the major part of the volumes or the bigger chunk of volumes for Arvind happened in the month of May and June 2020. Not in the last couple of months. In the last couple of months, the stock has gone through a gradual kind of a trend pickup. So these are classical signs for stock price. It's confirming a lot of breakout on the way upside. So taking out a resistance is a very difficult task for a stock. But if the stock can manage to take out a bigger resistance in a very gradual kind of a manner, in a very smooth kind of a manner, we generally consider them as stocks which have restarted their trending nature. So Arvind is a stock in that category. I would suggest that you should look to consider the stock even at current levels. And if there are any kind of a dip along the way, a 5%, 10% kind of a drop along the way, then I believe consider them as buying opportunities as well.
Okay. Raghavendra, your view on Arvind Limited, if you look at the recent triggers, there's been high demand for domestic cotton, export prices are healthy, there's abundant availability of raw cotton in India as well, making the visibility for margins, giving a higher visibility for the margins trajectory as well. But would you recommend somebody buying into Arvind Limited at these levels, or are there any other alternative textile companies the viewer can look at?
Specific to Arvind, it has got into a very good win-win situation where the raw material prices have gone down due to a bumper cotton crop. The denim, which is their end product, has also seen a price uptick where the supply lines have got dented from Bangladesh and China to the global player, to the global geographies. So Arvind has seen some kind of margin upward revision in its selling price for denim on its export orders. Pan-India also, it is moving very well through its showrooms and distribution network, as also making a foray in the online space. So it's a good stock to buy if you want to play the entire denim or a lifestyle or a cotton story. Moving on to the other stocks which are specifically from the same sector. On the large cap side, we prefer Vardhaman Textile, and on the small cap side, we also like Sutlej Textiles. Again, for the broadly same reasons, where based on a cotton stock, good cotton stock, the prices have gone up, yarn prices are seeing a margin uptick. So the Q3 numbers and Q4 numbers of these textile stocks, both Vardhaman Textiles, Sutlej Textiles, are going to be very healthy. And based on these earnings, we would see some kind of re-rating by the entire street, which would give a 20 to 25% upside in the next 3 to 6 months across textile sector. And these would be our top picks from that, Vardhaman Textile and Sutlej Textiles.
Okay, thanks for your view then. We're slipping into a break here, but don't go anywhere as we have more queries lined up on the other side of the break.
Hello, welcome back to Buy Now, Sell Now here on ET Now. Let's carry on with our queries. We have the next one from Shreyans Nahar of Chennai. And as the budget draws close, he's looking at some infra sector bets. He's also referring to the L&T order book being at a multi-decade high. So, and within infra, he's looking at Sadbhav Engineering. So that's the stock in question. Quite a long query here. Kunal, Sadbhav Engineering, how does the chart look to you?
Not attractive. I would not consider, to buy the stock at current levels. I believe if you're looking at infra sector, I think you should just concentrate your investments or your holdings on large cap names like L&T. I think these are much more safer bet. These stocks have managed to withstand even the worst part of volatility as well, and then make a comeback. So I think it's just a matter of time that these stocks, they typically make a comeback. So I think on that regards, I would suggest that if you're looking at themes like budget, and if you're looking at themes like infra within that as well, I would suggest that just concentrate your investments on L&T.
Okay, all right. What is your view, Raghavendra, on the interest space in the run-up to budget and specifically Sadbhav?
In the run-up to budgets, we would definitely position ourselves with some long positions in the infra space. From the large cap, Larsen and Toubro is the best pick we would have. Currently, there is an article which says that the National Highway Authority is constructing around 70 kilometer plus of highways per day. This earlier number was around 30 to 35. So we are seeing a great boost to the road construction across India. And that has been led by Mr. Nitin Gadkari, who has come out and said on record that this could continue at a bigger, faster pace. And Larsen and Toubro would be the biggest beneficiary of this entire road construction, engineering, capital goods thrust of the government across. So this would be our best pick in this entire space. Moving to Sadbhav Engineering, looking at the P multiples, we still feel that the stock is overpriced, and the peers would be from the peer space. Our pick on the mid-cap space is HG Infra Engineering. Considering its high promoter holding, a P multiple which says the headroom is there for another 25 to 30% upside. So Sadbhav Engineering, we would avoid at current levels. But yes, we would be bullish on the entire infrastructure engineering capital goods space with Larsen and Toubro as our top pick from the large cap space and HG Infra Engineering from the mid cap space from the same sector. And overall, we would advise to have a long positions going into the budget for the entire infrastructure space, as the finance minister have categorically mentioned that this will be a blockbuster budget, probably the best in the 100 years or so. So we would be bullish on the entire infra and capital goods space from here on.
Okay, all right. That's the verdict coming in then on Sadbhav Engineering, and you also have some alternate choices given in by our experts, so you can take your pick. Final query of the day, Madhav Singh of Bhopal writes to us. He wants to add LIC Housing Finance given the recent dip in the stock, and he wants to perhaps stay invested over the next 1 to 2 years because he wants to know the prospects over this particular time horizon. Kunal, good gains coming in for LIC over the last couple of months. In fact, if you just look at the last 1 month gain, it has been quite phenomenal from 345 levels to now, 415 odd rupees. Given the recent dip in the stock, is it an attractive level to add or enter into this counter, or should he wait for further correction?
I think there could be a possibility that it could go through a further round of correction. I think from 460, 465, the stock has already corrected some 50 rupees from those levels. So the first round of correction has happened to be pretty quick for LIC Housing. But I believe that when you generally see the first leading corrections into these names, it results into one more leg on the downside. So possibility, I believe, is that 385, 395 could be a good level for the viewer if he's looking to add on dips the stock. I think it's a good chart on the long-term basis. But I think on just in terms of timing the prices, if you can wait for another 20 rupees on the downside, I think that will be a better level for you to average LIC Housing.
Okay, and Raghavendra, how about you? Would you buy LIC Housing at current levels or wait for a bit of a correction?
Wait for a small correction in LIC Housing Finance, probably to levels of around 390, 400. Broadly, we are sitting at life high levels of the market, and specific to the stock of LIC Housing Finance also, it has gone up from levels of 300 to current levels of around 420, 430. So there is some kind of profit taking which could lead to a correction of around 390, 400, which would be a great entry point. But yes, we still continue to like LIC Housing Finance, considering it's cheaply valued versus its peers of HDFC or India Bull Housing Finance. And the structural story in the housing finance space is just picking up with interest rates going down, government's thrust on affordable housing, and that few data points freshly received indicate that even big ticket home sales in the range of around 3 crore plus have also seen an uptick in the region of Mumbai, Pune, and Delhi. So broadly, as far as affordable housing or big ticket homes are concerned, sales are picking up, interest rates going down, and some structural regulatory reforms in the housing space would lead to a very good story for a long-term horizon for the entire housing finance pack, and LIC housing finance would fare well even if you can buy now or wait for entry levels of around 390, 400 as a good long-term stock.
Okay, thanks for that. And on that note, a big thank you to both our experts for joining us on BNSN this morning. It was great to get perspective from you. Let's now move forward. We have earnings in focus, and HDFC Bank had delivered earnings on Saturday, and they were a good set. Asset quality was stable to improving. Profitability went up. Even the pro forma numbers on the asset quality are not that bad. So, it alleviated a lot of concerns on the street, and margins held up fine at 4.2. That was the NIMS. So it was a pretty stable result from them. Deposits and advances are growing very well, as we know, and CASA has improved to 43. So metrics are really good. This morning, on the back of that performance, HDFC Bank brokerage upgrades have been pouring in. So we have Motilal, which has a 1720 target on the stock. Asset quality steady, business gaining momentum, and they like the contingency provision. So HDFC Bank has provided contingency provisions on the pro forma NPAs. So that's what they're talking about. Then Jefferies maintains a buy with a slightly higher target at 1800 rupees per share. The only red flag for them is that HTBA still remains a bit of a drag on the overall bank. But apart from that, with collections near normal in a pandemic year and retail lending really picking up and NIMs expanding, they have a very positive outlook over here. Finally, CLSA has the highest target among all three at 1825 rupees per share. They like the private banking pack a lot. Normalized profitability, even in a pandemic year, again, is something they're flagging off. And they're increasing their earnings estimates post this quarter's result by around 4 to 6%. That takes them to 1825 rupees per share. So it's one of the top gainers on the Nifty today in what's turning out to be quite a tough day for markets. HDFC is holding fort, up nearly 1.5%. So it seems that the street is definitely cheering those earnings, Karunya.
Right, definitely a big outlier in today's trading session, HDFC Bank. Meanwhile, it's official, the Piramal Group has emerged as the preferred bidder for DHFL. ET now learns from sources that Piramal's bid received 94% votes from the Committee of Creditors. Oaktree Capital received about 45% of the COC's votes that ended on 15th of January. Priyanka joins us with all the details and to tell us what to expect next. Priyanka.
Well, yes, it's official that Piramal Group has been declared as the winning bidder for DHFL, and from what we are picking up from sources, the bid by Piramal Enterprises has received 93.65% votes from the Committee of Creditors. Oaktree Capital, which was also considered one of the front runners, received only 45.62% vote from the Committee of Creditors. To take a look at what are the details of the bid by Piramal, the total offering stands at 37,250 crores is what we are picking up from sources. The upfront cash in the bid stands at 17,700 crores. There's also an ancillary component of 19,550 crores with a 10 years tenor. And this bid includes 1,000 crores which has been ascribed for DHFL's insurance business. For the FD holders, Piramal is going to be offering 10% over the COC allocated amount because FD holders also constitute a large part of the financial creditors. There's also 1,000 crore additional interest income for financial creditors coming in from Piramal. But of course, what we have to watch out for is that today the Committee of Creditors of DHFL will be meeting to decide the way further, to decide what steps need to be taken before this plan is submitted to the Reserve Bank of India as well for further approvals. But there is a possibility that litigation may happen from multiple sides. There is a possibility that Oaktree Capital may go to court. FD holders and NCD holders may also go to court. So all of that is something that we will have to watch out for. And if any of that will delay the process further. Remember, FD holders, debenture holders make up almost 50% of the financial creditors with an exposure of 46,300 crores. So that the litigations in court also will be something important to watch out for.
Thanks, Priyanka, for that. Slipping into a break here. More updates on the other side. Keep it with ET now. Welcome back. Still watching Buy Now, Sell Now. It's time to unveil the answer of the BNSN quiz of the day. We asked you which consumer hygiene product has the largest category size in terms of rupees. The options were soaps, detergents, sanitizers and hand washes. And the correct answer is option B, detergents. The names of our champions then Gupta Amarnath, there's Krishna Chaitanya and Parva Vaishnav. All three of them got it right. Congratulations to our winners and thank you so much for all our viewers for participating. We're timed out on this edition of Buy Now, Sell Now, so that's all we can accommodate in this edition. Thank you so much for tuning in.